Good afternoon, Brokers Playbook, Brokers Playbook family. This is Simeon Papilias, and I'm live and direct from the harbor in the center of Toronto. I got the CN Tower behind me, and I have the ever handsome, gifted, and amazing Patrick Francey, CEO of Rain Canada, the Real Estate Investment Network. Patrick, welcome to Brokers Playbook. We are so excited to have you on, man.
I'm glad to be here. Look forward to the conversation.
Patrick, where I want to go from here is first and foremost, Brokers Playbook is a broker facing, an investor facing, a commercial broker and commercial investment facing cast. It's both video, audio. Basically, people can find us on all social media, and of course, everywhere where people listen to podcasts, Apple, Google, etc. I understand Rain has been around for a very long time. It's been around longer than I've been in the business, and I've been in the business for 16 years. Yeah. And we got to where we are by leading with education. And I want to tell you that right off the bat, at the very beginning of my career is when I started following yourself, Mr. Campbell. The organization is in its entirety, and I'm referring to the Real Estate Investment Network, the biggest Canadian real estate investment focused education network. Yeah. Can you please give me, I don't want the Coles notes. I want a nice summary of kind of what has happened over the last 20, 30 years. How has this gone down? How did you become what you are today?
Well, I mean, it's a great question. You know, we've been around for 29 years, and our focus has always been around education, but in behind the scenes that we're also known for our research. So we look at the economic fundamentals of what's happening. We do the analysis of that. From our perspective, when we're educating people, we're also educating them to look at the economic fundamentals that drive a real estate market so they can look into the future and actually have some sense of where that real estate market is going to go that they're interested in investing in. Maybe even saying, no, that's not the region I want to invest in, even if it is my own backyard. Now, that all stemmed from the fact that, you know, many years ago, there was a time where, you know, late night TV, get rich quick, buy it for $1 down, no money down. I mean, that stuff still exists, although it's, you know, it isn't the late night TV and there's lots more options. The point is this. Is a lot of individuals were investing in real estate, but it was very speculative. You know, they were actually speculators, not investors. And really when Don got involved, Don R. Campbell, who wrote the book Real Estate Investing in Canada, and who was a big part of launching Rain many years ago and taking it actually to the next level, it was really just this. We've got to change the conversation in the world of investing in real estate so that we're actually investing, not speculating. And that was based on the fact that the economic fundamentals, what drives real estate, is actually quite predictable. We know what does it. Tim Johnson, who was one of the originating founders of the Real Estate Investment Network, was part of that whole conversation of looking what was happening in the economy, really Alberta based at the time, very Alberta focused. And when Don got involved, he took it on a national scale, you know, British Columbia and then into Ontario, where the primary chapters were. And that was it. And we became a community of real estate investors, like-minded individuals. And we take that community right across the country, and we have members from literally, you know, shoreline to shoreline now.
So it's easy to see why there are so many, like Rain. Literally, if you look at other real estate investment networks and educators, are literally graduates, 90% capacity of Rain. And to me, that's not a surprise at all, because Rain has really. And I want to focus on two things that you've said already. One of them is, excuse me, the fact that you guys focus on research. And what most people, other than the membership, what most people don't know, this isn't a raw network of hype or nonsense. It is really research driven, meaning that your studies are actually the guiding principle to thousands of investors in the country, meaning they literally wait for the publication to come out eagerly to know where potentially their next dollar is going to be heading to. So, and I'm one of them. So I follow the research closely, and I look at the merits and I look at the sources. And year after year, it delivers because once it's written, it's history. So anybody can go back to any of your publications and look at the merits of the research and really confirm and put that into perspective. With that being said, you also said the difference between an investor and a speculator.
Mm-hmm. Well, there's a couple things around it, and I want to just add to one thing. The other thing that we, in terms of our research, the one thing that makes us very unique, almost standalone, I would say we are standalone in that we don't sell real estate. And that was a stand that we took right from the beginning, which was, how can we provide research for a region if we have a deal there? So in other words, there's too much, right? From my point of view, is one of the stands that we took, and I'm not making anybody else wrong, but it's often, we'll educate you how to buy real estate. This is the model. Oh, and by the way, we happen to have the perfect piece of real estate that fits that model. And this region is awesome, so I don't want to make anybody wrong, because there's a lot of people who've gotten very wealthy doing those deals. But we looked at it and said, if we're going to be a national organization as opposed to a local organization, we have to be able to educate people and then to expand on that education, that research, without any attachment to it. So I don't make any money if you buy real estate. All I want to do is support you in the education to make those sound choices, and that you want to hang out in our community because it supports you in that regard. So back to the conversation around investment versus speculation, probably one of the best examples that we can use is, one of the best examples is that for, 2010 Olympics, Whistler was going to be the next hottest thing, and people were buying real estate in advance of the Olympics. Now, they were thinking that there's going to be a big lift in real estate prices in Whistler at the time. Now, there's been a huge lift in real estate prices in Whistler, but nothing connected to the Olympics. So the point is speculation is anticipation of an event driving prices. There's no real fundamentals based on it, and all of a sudden, things go south. It doesn't work out the way investors think, which are then speculators. And that's the kind of stuff we're talking about. So we make educated decisions based on what are the economic fundamentals. Why are people moving to that region? Why are rents going to go up? Why are housing prices going to go up? And that's what we teach people, and we show them how to do that research. We teach them how to fish. And yes, we provide a lot of reports. We've always done that. That's changing in the digital world these days, but ultimately, we're always looking at research of areas.
That's amazing. Thank you for explaining that, and the difference in what really makes a speculator is somebody who, and I think speculation is always driven by hype, meaning like right now, like I'm literally at Marina Farm at the Harborfront Center, and if you look behind me, you have the absolute most dense piece of real estate in Canada. It's none other than C1 of Toronto's Toronto Real Estate Board, and we're talking about speculation. Toronto has been rising in prices for a decade or more. I remember 2008 when people were trying to plan their trough plan, and the world's going to go down and this, that, and the other, and it hasn't looked back since. The only drivers of any contraction were actual artificial barriers implemented by an Ontario Fair Housing Plan, by the Wynne government, which was completely designed to do what it did. It was supposed to just put that stick in the spokes of the wheel, stop the craziness, focus, and see what happened. And then we find ourselves 4 years later, 15% ahead of the apex of those prices in 2017. When people, though, in my market, when people speak of the engine that will never run out, it's worrisome and it's dangerous. And it's as a broker now, speaking to my brothers and sisters in the business, and having you on board, who leads one of the fundamental research companies in the country for real estate investment, I think this is where the onus and the liability comes back to us. To educate and to facilitate responsible investing, meaning that I'm not telling you not to buy in Toronto, because I do believe the prices will go up. But buying anything in Toronto without doing your research, without understanding the fundamentals of why Toronto is going to continue to grow, is speculation, and you're a danger to yourself, your family, and everyone around you that might just be inspired by your recklessness.
Well, I mean, you make a really good point, and I think that what you said is really pertinent, because it's not to say don't invest in that market, but understand that there's some critical thinking that needs to go behind the decision-making process, and that it's not just any condo or any piece of property that kind of, you can afford. It's the cheapest price, which is often where people make those decisions. I can get in real cheap, and then 3 years later they're going, oh no, I'm in trouble. So these are the kinds of things. So it's a critical thinking that goes along with the decision.
Well, here the danger lies in the fact that everybody thinks that there is nothing to worry about, meaning that doesn't matter if I have negative cash flow of $1,000 a month. It's going to go up by 60,000 a year. So I'm going to pay 12 grand to make 48. My friend. It's, if it was that easy, everybody would do it. But the problem is that because it has gone on a cycle that's longer than your typical boom, than your typical upward trajectory, it is starting to create recklessness. I see it every day. I am an investment focused broker. I have a book of business of 10,000 investors that are loyal to myself, my business partner. We've built this business for 15 years to get to this. I'm not talking about 10,000 names in the database. I'm talking about 10,000 loyal clients that transact almost 800 transactions a year. And when we have the conversations, or when we would get a call from somebody who 5 years ago was had 100K in the bank, and today they're sitting on 2 million, and the confidence might be a little too aggressive. Just because we've done it before. I'm not saying that I'm not smart in guiding you, but I'm saying is it's not me that generated half of that. It's the sale wins that have been in our sales, in our favor. One little glitch, it would have been the other way. And people simply cannot forget. And as brokers, what I want to bring home today is, how does a broker get massive value using the research and your hard work to guide the market more responsibly, to deliver more wins to their clients? Why would I, as a broker, want to be your friend? Why would I want to follow your organization and what it does?
Well, I think, from a broker's point of view, the more that you can, I always say that an investor focused broker it's about relationship, as you know, and ultimately when you have a client that's a relational kind of client, in other words, it's not transactional, you're not looking at one opportunity, you're looking at many opportunities to continue to do business.
Lifetime value of a client.
Exactly. And
lifetime value of a client.
So the more, the more that an investor focused broker can actually be investor focused, and the more that they can understand the decision-making process and why you would invest and give guidance. So in other words, the more educated they are in terms of a thought process of an investor, what is the goals that they're trying to achieve, what's going on economically, that they can work and make decisions with that individual. So how do you plan? So when you're sitting down with an investor, how do you as a broker sit down and say, okay, well, what are you working backwards from? And then how do we put the pieces of the puzzle together on the financing side of it? So to your point on, is that, sure, there's some high net worth individuals who say, I don't care, it's $1,000 a month, no problem. I got that covered. Well, can you do that 3, 4, 5 times? How many properties do you want to own? Are you just doing it one and you're going to ride the wave of one deal, or are you going to actually risk mitigate, hedge your bet? So make sure that property is actually, at least negative cash flow, or I should say break even cash flow. Or how do you structure it so that you can actually grow a portfolio and do it well? So the insights that a lot of investors are looking for, they're reading the headlines. We do a segment, called "What's Behind the Curtain" or "What's Behind the Headlines," because the headlines are all hype. We often, one of the things that we talk about is, what's the goal of a newspaper? and everybody thinks, well, it's
Sell papers.
to deliver news, and it's not even to sell newspapers. It's actually
To sell ads.
to sell advertising, right? So it's always the blaring headlines, and it's the doom and the gloom, and it's the good news, the bad news. And I mean, we've seen newspapers with exactly the same article, different headline, and neither of them make sense. So it's being able to break down and do the analysis on what's behind the curtain, on not only on the headlines, but actually when you listen to what the economists are saying, and even what the banks are saying. And you know, I'll give you a quick example, if that's okay. Is just recently, you know, we had CMHC early on in the pandemic said, you know, the world's going to crash in housing, and then they changed their forecast. Then Bank of Montreal and Scotiabank, or sorry, RBC and Scotiabank had said, nah, this is not going to be that way at all. It's going to be this, and they gave all of their you know, short-term, long-term, potential bad case, worst case, and then they've even changed their story recently. So it's not that anybody knows exactly what's happening, but we've been talking about, even before RBC revised their forecast here just on this week, I think. The point is that, you know, we had said this is what's going to happen, and that was because we were looking at the fundamentals that are driving it, even in a COVID world. And so I think that I know I'm going off on a bit of a tangent. I'll come back to
and that's fine. It's fair.
But you know, and this is not to make economists wrong or banks wrong, but this is to give you the next level of education about, understand that whether it's an economist for Scotiabank, RBC, BMO, name a bank, doesn't matter. You know, and CIBC. I mean, gosh, they've all got great economists. But there's one fundamental thing we have to understand about economists that work for banks. They have an agenda, which is not to freak their clients out and or to gain clients. I mean, that's not wrong, but they're operating from a very guarded place. You got to be very cautious.
And always. And they're always going to win as a result of either scaring the consumer or putting confidence in the consumer.
Totally.
Depending on the time of year, like we literally see them talking about real estate crashing in January before RSP season, and before RSP season last day contribution is done, they're peddling of how amazing the market is and get your next mortgage from here. It's just
100%. And they're so, I mean, they're regulated. They got OSFI, they've got the Bank of Canada, they've got all these things that they're trying to move all these pieces around and manage and control the housing market and all the things that we're doing. The fundamental difference is that when you start to learn how to look at the market differently, and I'm speaking to your brokers, and this is, of course, what Rain does, we teach people to fish. We love giving the research. We have no problem with that. But within our community, you know, we can't cover every town, every area in Canada. So we teach you how to fish. We teach you how to look at research, how to look at those headlines, how to listen to economists. Now, as a broker, if you can sit down with a potential client and have a conversation with them about their investment decision and why they're looking at that particular property or why they're using that strategy. I mean, gosh, there's some right now, not every place is great for a fix and a flip. You know, don't use a burr in certain markets, where in other markets, it's a great strategy still. So these are things that we want to consider. And I think when brokers can guide and give insights or give, you know, share some wisdom with their potential clients, that client's going to be much happier and feel a lot more confident in making the decisions that they have to make.
And I couldn't agree more. We have a bi-weekly live Facebook show called Brunch with REC, and hundreds of Canadians join us live. In fact, like literally almost tens of thousands watch the show over the course of the first 30 days. And we're huge proponents of buy and hold, period. No matter what the specific strategy for anywhere is, if I don't have to sell my real estate, I never do. I've literally sold 2 pieces of real estate my entire investing career, and I started when I was 21 and I'm 41. So in 20 years, I've sold 2 properties. And hopefully in the next 20 years, I can only say I still only sold 2 properties. So if the market favors me, if I'm so blessed and I never have to adjust and pivot, holding real estate has served my father extremely well. It has served my interests extremely well. As a matter of fact, there's nothing that any job has given me, from a monetary perspective, more than the permanent ATMs I've established all over the country.
Yeah.
So every time I've ever needed anything, call to my broker, refi, please. Take the money, do what I need to do, invest again, etc. So the benefits of investing in real estate are obviously second to none. Patrick, this is Broker's Playbook. I want my audience and I want our audience right now to gain from specific words that you will use in my next question. From all the research that you do on a yearly basis, from all the content you create, I know you have an incredible podcast. It's called the Millionaire Podcast.
Everyday Millionaire podcast. Yeah, when we just launched the Rain channel, which is a digital platform. It's our own private platform, by the way, an OTT platform, and we just launched that. So we're delivering stuff all the time.
So what I want there is I want you to tell us quickly, if as a broker, forget the investor for a second, because we service the investor. And if any investor is watching, if you don't know Rain, it's going to change your life. So wake up and smell the coffee. As a real estate broker, I think a lot of people think that, no, that's only for the client, for the consumer. No, bro, it's for you. Because A, you should be an investor if you're going to be serving investors, first of all. B, you should know every key metric and every indicator that affects the investment life cycle. How do you identify the cycle that you're investing in? Are you on the down, on the up, on the stabilization? Where are you? What market are you looking at? So if you, Patrick, had to tell me as a broker, I want you to read these 3 reports, or I want you to watch these 3 podcasts, would you be able to tell me with certainty what I would get the biggest value out of Rain with?
Well, I think the biggest value, right now, because we just launched the Rain channel, it's a subscription based kind of platform. I'm going to sound a little dumb. I think it's $34 a month, and we do a lot of market updates. So we do what we call the real estate news segment. We do market updates segments, and these are weekly shows that we're constantly talking about what's going on economically. So you're staying dialed into the economic fundamentals of what's driving a market. So you then become far more educated and up to date on what's really going on. You're not even disseminating what the headlines are saying, because we're actually doing it for you and we're doing the research for you. So then we're doing little short 20 minutes once a week, real estate news, market updates across the country. So that's
amazing, Patrick.
That's great value for those of brokers who are wanting to learn how to invest in real estate. Sadly, it's one of the things that we see often, and of course I know many brokers, and the most successful brokers I know that live in the investment or work in the investment space are investor focused, but they're also investors themselves. So they relate to their clients. They know what their clients are going through, whether it's a soft market or a tenant that just moved out or trashed the place or whatever it might be. They relate to it in a meaningful way, and that's why they create really awesome long-term relationships. I mean,
and they've gone through it.
What's that?
And they've gone through it.
They've been through it. So
unless you've gone through the nightmare that is a professional tenant, the nightmare that is a hoarder, the nightmare that you, when you meet people with mental illness, like we can be empathetic about it, but it doesn't make the nightmare any less.
Well, it's interesting that you, and only because you brought it up, it's interesting, part of the education we provide, and listen, if you're going to be a landlord, you're going to do your best to screen tenants, and you're still going to get caught occasionally. But, at the end of the day, we teach such an effective methodology for managing properties if you're going to do your own management, which many people do, or even hiring the right property manager. We got a great relationship with RPM, which is a national property management organization. Real Property Management is what they're called, but they're a national organization. When you start to understand at that level the quality of property management that's available and how to work well with a property manager, you avoid those kind of scenarios too, because everybody's worried about toilets and tenants, right? That's, it's like, I don't want to have to deal with that. Well, guess what? If you know how to do
this is the reality. This is the reality, no doubt about it. Just funny enough, you're talking about property management, you're talking about that side of things. My organization, this is for Brokers Playbook, which is kind of our gift back in our educational component. but in my firm, in my practice, the REC, we just literally launched in March our property management company, which
Beautiful.
is focused on serving the interests directly of our client base. So we're not one to take on. We're not looking for business from the outside, only because our predominant business is to transact real estate and grow portfolios.
That's brilliant. That's brilliant. I love that strategy. That's a great. That's how you serve your clients. That's the relationship right there.
So with that being said, think of how, so the relationship to my client means so much, where if I took the time to research, to sell them the appropriate property, to use the right structure, to be patient, to get the property, and at the very end, I found myself giving a referral to companies that I didn't trust.
Mhm.
That you're not doing what's best for my client, you're doing what's best for you, and I have to accept that reality, and my client has to accept this reality, and they're going to look at me with a sour face that this isn't what I dreamed of.
Mhm.
So I'm tarnishing my relationships at the end based on other people's incompetence or shortfalls.
Mhm.
So we had to take matters into our own hands. And the reason I'm bringing this up to you is not because I'm soliciting, because we are not taking on any properties. We only service the ones we sell. Is because the fundamental principles of the property management that we implemented are literally taken out of the books that you've published.
Mhm.
So if there was a saying that my late partner and mentor always taught us, is the only reason you can see further and further and stand higher and higher is because you stand on the shoulders of giants.
Mhm.
And if you don't respect mentorship, and you're not coachable, and you don't literally say thank you, Patrick, Francey, Rain, or whoever you've taken something from, you gave that to the world.
Mhm.
You gave it so we can take it. So what I'm saying, from I'm a podcast host, a 15-year real estate vet at this point, as one of the leaders in real estate in this country, or I'd love to consider myself that anyways, because I try so hard, is to say thank you for the people who influence, mentor, and contribute to the game.
Mhm.
So I want to let you know that you are seen as a contributor, an influencer, and a leader in the space, as far as I'm concerned. And I think a lot of our audience would agree and get a lot of value out of today.
Well, I
Uh,
appreciate that. I sincerely appreciate that, and I want to, I want to give you, just to share a philosophy because of your audience, that I have, that Rain has, that we teach, and especially right now when we actually teach investors, we do a segment called "How to Get the Bank to Say Yes," which is really understanding how do you bring all of your information together to present it in a way that is complete and transparent and brings all of it together so that the bank, ultimately your mortgage lender, says yes. But here's the fundamental philosophy that we have, and we just had a member meeting last night, a couple of them over this week already, but the point is this, is I say right directly, and these days I look right into the camera and I go, ladies and gentlemen, please do not walk into your bank. I love banks. I got nothing against banks. But as an investor, you need to think into the future. You need to put the pieces of the puzzle together, kind of where are you on the chessboard. So only deal with an investor-focused mortgage broker. Full stop. Don't walk into the bank, because you're going to get way more choices. You're going to have a future when you start to put a plan together with an educated broker. And that's a fundamental philosophy, and I believe that right to my core these days. Is that going into the bank, as awesome as they are, if you're buying a house, buying a home, awesome, go do it. But that's an option for you. But as an investor, no, you got to deal with a broker.
I truly wish my co-host, Miss Laura Martin, she's a chief operating officer of Matrix Global. They're one of the biggest private lenders in the country. extremely fluid. And they're just a tremendous organization. But she's been saying this and screaming it from the rafters for years. And I wish she was here to hear this from you. She would have been vindicated for everything she's ever gone through in her life and spreading that message. So I'm going to make sure that she gets a clip of this and she gets to put her own 2 cents and maybe send you a thank you note after. Patrick, I think we've covered enough ground. Honestly, unless you have something specific to share, I'm definitely gonna, once this goes up, and hoping that this episode will be shared with our audience in mid-July, that we're gonna get a few offerings from Rain to put on our website to be able to really get everybody a space to have to put a question for you for the episode. To have a direct link in communication to your organization. And that would be absolutely fantastic. Patrick, thank you so much for coming on to Brokers Playbook. So honored to have you. So thankful to have you.
Thank you very much for having me on the show as a guest today. It's been fun, and look forward to having lots more conversation with you or your organization.